Okay, so we're done with the corporate interviews, and but we ran into Chris Robb here. So everyone was bearish last year. So you said I'm all bulled up.
Yep.
This is the bottom.
Yeah, it's the bottom.
How is it today? Are we too bullish, and is it the top,
I
or?
think we're just.
Okay, so we had an hour slot here, and we had, I think, 7 corporate interviews. So we were worried we wouldn't have enough time, and it turns out
We did.
We have an extra 10 minutes, and YJ Lee is like over there. He said if he can extract himself from a meeting, he'd kind of stop in for 5 minutes. But if not, so Matt. Yeah, what are some of your takeaways? You were on a panel today on the missing middle. We'll be publishing that sometime. I moderated 2 panels yesterday. I got one tomorrow on the midterms. But so far, what anything stand out for you?
I mean, I thought your DLE panel was very interesting. I attended the session by Eramet as well this morning, and I think there are some really exciting takeaways, but also some very important takeaways on DLE. And really, it seems to be, look, you've got to do the work, and talking to people who have DLE projects. There's off-the-shelf DLE technology, but you then have to adapt that to your specific ore body, your brine body, and there are no shortcuts in DLE land. So, DLE is a viable technology. Eramet have proven that, but there are no shortcuts. You've got to put in the time, and juniors who turn around and say, we're going to do DLE and we're going to be in production in 2 years, not really viable. So, I mean, I think. There was a very interesting presentation by Eramet. There was some really important points, I think, at that DLE panel that you moderated as well. And I think it comes out very clearly that if you are prepared to do the work, put in the work on DLE, it is a viable technology. But obviously it takes a long time to do the testing.
Yeah, and they've been, I think, 14 years in the making.
14 years, and I mean, he went through, all of the iterations of the technology and everything in the presentation, and it's like, we went through this 20 times, and we went through that 20 times, and we went through the other thing 20 times, and you're sitting there going, wow. I mean, there's a lot of work been done to get this into where it is now. But the other thing that was very clear, that came out very clearly from his presentation, is massive optionality. So, now they've got the 24,000 ton per year module, but they're talking about going to 150,000 tons per year off the project eventually. So, you do the work, you get it into production, you prove your concept, but after that, there's the potential to really ramp up production quite significantly.
Okay, I was struck by the capital intensity per ton, at 39,000, and they said, yeah, but we got to do better next time. And he was talking about, actually, there were a lot of workers, like 1,900 workers on site, and every day, as you're building this, if there are any delays, that counts as CapEx,
yeah,
right? Just the workers, right, in the construction phase. So he said that there were a lot of learnings from that the next time, that capital intensity will be much lower. But that
and I think that has really important follow-throughs, perhaps to the Smackover and the US projects, because obviously they're much closer to, population centers and infrastructure and chemicals availability. So I think potentially it could cost less from a CapEx point of view and be simpler from a CapEx point of view for some of these North American projects.
We'll see.
We'll
see. I mean, the
famous last words.
The cost of an employee in Argentina is less
lower,
than in America, and there are other components of the cost beyond labor. But it was interesting. You said that there's very little Chinese technology. He said a couple of valves here and there, but I did ask him that afterwards. But it just, for me, a solar DLE, capital intensity relative to a geothermal DLE like Vulcan, or even standard, I don't remember what standard capital intensity per ton is, but it's higher than 39,000, right?
Yeah.
And Vulcan's was much, much higher than that.
Yeah.
But all of them said, the second one, the third one, the fourth one, right, the brownfield and the learnings will be better. But they all insist that the OpEx, right, once the capital's deployed, it should be, hopefully, second quartile, at least, and over time there's learnings. But we're in a stage of the market, it might take away, just again, we're growing at 15 to 20% a year on a much higher base. And 5 years ago, 6 years ago, 7 years ago, there was this fear that, or the DLE promoters were saying, we're going to put 100,000 tons on, it's going to be in 2 or 3 years, and it's going to kill hard rock, it's going to kill conventional salars. That's not the case, right?
No, you have to prove it. You have to prove it, and that takes 5, 6, 7 years.
Yeah.
And then once you prove it, then you can go a little bit faster on the expansion. But you can't just start a DLE project and say we're going to have 100,000 tons in 2 years. It's just not going to be viable.
Right. So I'm not worried that those tons are going to be needed. Yeah. And it's good to see, for all the DLE proponents, Eramet is now at, I think, 80% capacity.
89% capacity in June, apparently.
Okay.
Yeah.
And they're at 80 to 90% of the cost that they had forecast. I forget what they are, but they're relatively low cost.
Yeah.
And that's a good thumbs up for DLE, those who like DLE stories. Okay, what else? You moderated this missing middle panel.
Yeah, I mean, I think, we have talked between ourselves about the missing middle quite a lot over the last, however long we've known each other, 5 years or whatever. Yeah. And, it is something that continues to be an issue in the industry. And I think, there's lots of issues at play. First of all, at the moment, the cathode industry is a very low margin business. So, how do you encourage companies to invest in new capacity in North America when they're not making money in capacity in Korea and in China and everywhere? So I think that's a major issue. It's a much more complex business than people think. PCAM is a business that very few people talk about in the industry. It's really, really complex. Cathode manufacturing, again, very, very complex business. And I think that, there needs to be more love. And we're starting to see love now from various government entities, but we need to see governments acting as enablers, because obviously in this environment with the very difficult equity market, we need to see governments enabling these projects, supporting these projects, either directly providing capital or enabling capital for these projects. And these are quite high. I'm not going to say they're high capital intensity, but they're high capex projects, and it's difficult to develop. So we need to see tax credits, we need to see incentives, we need to see money being provided, and low cost money as well.
Yeah, I learned something new, which I didn't know. So I always just think of cathodes, right? But cathodes, there is PCAM and there's CAM. Yeah. And I met with someone who's ex-Umicore, and he explained to me that actually lithium goes into the CAM, but there's no lithium in the PCAM.
No, PCAM is either iron phosphate or it's nickel, cobalt, manganese.
Okay, but there are some people developing like PCAM. There are assets in like Korea and in Europe. Yeah. So I'm just always thinking from like a U.S. supply chain perspective. You have lithium mine, refine, then you need CAM. I just thought that you need the PCAM, but I think if you have CAM, then you got the batteries.
You've got to have PCAM. You've got to have PCAM.
I'm not saying you don't have to have it, but you don't necessarily have to build it definitively here, in America if you have it, in a few other places. But you do need it, but it's more a it's more a nickel graphite, consideration, not a lithium consideration.
It's better if it's closer to the CAM plant.
Okay, fair enough. All right, so I'm just trying to solve more lithium than I am the other components.
Yeah, I'm going to fly the flag for the other components.
Okay.
As always.
Okay, very good. Okay, anything else? We got 1 minute.
Oh, 1 minute, no pressure. Yeah, I mean, I think there were lots of things. I mean, I think I found the conference a little bit calmer this year. I mean, before there have been a lot of new entrants. You've got lots of people to meet and everything. I knew a lot of the people who were here this year, so I think
you weren't here last year.
Well, I wasn't here last year, but I was here for the previous 3 years. Yeah. But I think what I'm saying is, I think it feels like the industry is maturing a lot more than it was, over the last few years. So that's my other major takeaway.
Okay, I think there's still a lot of service providers, but there's a lot more juniors here, right? A function of like companies got financed and they're spending money and sending their people here. And there's a lot of corporate activity. There's actually a lot of the companies I'm not seeing here in the networking area because they're in suites in meetings with strategics that are here. So anyway, the vibe is good in general, but it's not over exuberant by any stretch.
Yeah,
and,
which is nice. Which is nice. We don't want over exuberant. We want it's calm and stable.
Yeah. And I thought the Rio presentation yesterday was interesting. No groundbreaking news there, but the guy has only been in the seat for 6 months, and he said lithium is their fastest growing segment, relative to copper, iron ore, and aluminum. It's also attracting the most investment from them, but it will also be the most volatile of their commodities. And he's a big proponent of Argentina's cornerstone. It's going to be 2/3 of their 200,000 production in the next couple of years. But watch this space in the next few months. He's saying 1/3 of their business will be in Canada, which is essentially Quebec. Yeah. So good on both those countries. We love Argentina and Quebec for lithium, and good to see that they're going forward with both of those, and they see
reassuring, I think, for the industry.
Exactly.
Yeah.
Okay, great. Thanks, Matt.
Thanks. So thanks very much for joining us this afternoon as the Rockstock channel takes over the live lounge. Particularly thanks to Fastmarkets for organising such a great conference this year. My name is Matt Fernley, and alongside my colleagues Howard Klein and Ben Hammond, we're going to be meeting 7 companies over the next hour. So we're going to have to keep it quite tight. So first up, joining us is Blake Hylands, CEO of Lithium Ionic. Lithium Ionic trades on the TSX Venture Exchange with a ticker symbol LTH and has a market value of approximately 145 million Canadian dollars. The company is advancing the Bandeira hard rock lithium project in Brazil, which could be the next cab off the rank in an exciting lithium production district. So, Blake, welcome to the live lounge.
Thank you.
I'll start off with the first question. So, what have been the most important questions that you've had this week, and what do you think they say about where the industry's heading?
Yeah, I guess in general, sentiment has just been so much more positive this year than years past, and we're starting to hear a lot more about our material, where it's going, pricing, those questions. I mean, we're all seeing some of the new forecasts for where lithium pricing is going, and obviously becoming a lot more bullish in that directive. And so, we get asked a lot of questions about where the project's at, permitting, how it's going, and how we're going to finance that. And so, seeing a lot more interest in the space right now, and certainly a much better outlook for pricing is helping us a lot when we look at how we're going to finance this project, and help people understand how quickly we're moving, and that we're going to be in production at the end of next year. So I think we're getting a lot more around the material, where it's going to go. Obviously we have an offtake agreement in place now that we're very happy about, but we're looking to expand and continue on. So lots of opportunity there, and it's just been such a positive outlook at this event, which is a nice change.
Nice change after last year. Yeah. Okay. So for investors who may not be familiar with Lithium Ionic, what do you think is the single most important thing that differentiates this company from other companies?
Well, I mean, look, I'm a geologist by background, so I always kind of lean on the uniqueness of the region in the Lithium Valley. Obviously, first and foremost, I could say the people that work on this project are spectacular in the work they're doing, and our partners, and how they've helped us move forward. But when I look at this project as a comparison to other jurisdictions and regions, it's just it's a standout, booming, up and coming hard rock district that I think in the future is going to rival the West Australia type district. And so I guess I'm slanted being a bit of a geologist to answer here, but
well, you're in good company.
Yeah, I mean, I think that's it. It's just that, the rocks set this region apart, and when you have that, I think you can easily set yourself apart from a lot of your competition. So yeah, I put it into the rocks myself.
Yeah. Okay. I mean, it's definitely a really exciting, vibrant sort of development area, and there's lots of stuff in Brazil. It's not just lithium. There's graphite. There's manganese. There's nickel.
Yeah, and look, Brazil's a big country, and there are lots of great projects everywhere, but Minas Gerais in general is an unbelievable jurisdiction to work in. I think it's a globally spectacular jurisdiction. I'd put it up against almost anywhere in the world, and we've seen a ton of support from the state level, from the federal level. The communities are very supportive. Traditional communities are very supportive. So yeah, we're very lucky. Infrastructure is great. You know, we have access to water, we have access to port, hydroelectric power, and then again, supportive communities. So it's really hard to beat. It's rare to have something where you have high quality, high grade deposits, low cost deposits, and you have, you know, a mining state with good, smart people working in it already that know mining, and you have all the infrastructure already laid out there for you. It's you know, we're blessed to have that.
Brilliant. Okay, and why should investors own Lithium Ionic today, and what are the key catalysts that you're going to be delivering over the rest of the year?
Yeah, it's those key catalysts is why they should own it today. I mean, we're working very closely with the state and the Fed now on a permit process that we're leading the way on in the region. We have a couple months left here on the federal process, and then we would be back on the state panel to be voted in to obviously move the project forward. The state's supportive and the Fed is supportive. So a permit to start construction is a huge catalyst for any project. We've got, you know, many others as we start to do long lead item orders and as we start to finance this project. It's going to be catalyst after catalyst after catalyst. And I look at this project and the multiple it trades at versus our peer group. You know, we're probably you know, a quarter of where a lot of our peer group is trading at right now, and I think that's the market wanting to see us execute on a couple of these things. And once that happens, I think the floodgates open. We get an immediate re-rate matching our peer group, and then people start to see how low cost and how fast these projects get built. DMS only for us to start. And then as we start executing on that, you know, the multiple we look at is our neighbor Sigma. They you know, it's almost a 1 times to NAV, which is a 10 times multiple from where we are right now in the market. So, you know, from where we are today to constructed and operating, we think there's a 10 to 15 times multiple from where we're sitting, and that's, you know, 18 to 24 months. So, you know, why wouldn't you buy it? You know?
Brilliant. Okay, Blake, thanks very much.
Thanks so much for the time.
All right, and up next we have Bruce Richardson, Executive Chairman and CEO of Anson Resources. Anson trades on the ASX under the ticker ASN and on the OTC under the ticker ANSNF, with a market cap of roughly $80 million. So Anson is advancing the Green River lithium DLE project in Utah's Paradox Basin, which is targeting 10,000 tons of battery-grade lithium carbonate. So Bruce, welcome back.
Thank you, great to see you, Ben.
Great, so let's start off with what is the major discussions and conversations that you've been having at the conference this week, and what does that tell you about where the industry is heading?
Yeah, well, it's been very upbeat. You see a return of interest in lithium. Again, on last year, it seems like another level at the moment. So we have been talking to people who are traders, investors, and even one OEM. So that's a little bit different from last year. We can see continued interest in our project as we continue to advance it.
Wow, that's pretty exciting. So just a few days ago, I had the opportunity of visiting site at Green River, so thank you very much for the opportunity.
You're welcome, yeah.
And it was clear that Green River hosts multiple advantages. So is it possible if you could help investors understand what is the major differentiators of Anson and Green River compared to your peers?
Sure, yeah. So the cost is lower, production cost is lower, and it's driven by 2 things. First, it's the purity of the brine. So something that we discovered doing some work with Coke last year, that we have very low impurities, and that means less work to do to extract that. That's a driver of lower cost. What we've had in the other project, the Paradox, is similar at Green River. We have pressure, so 4,500 to 6,000 psi, and that means it pushes it towards surface, so we don't need to pump as much or spend as much electricity and money on bringing it to surface. So that's a really low-cost driver, those 2 things. And as you saw when you were there, there's lots of infrastructure, right? And everyone who goes there says, oh, I get it now, this is why they purchased this area. We've got the power lines going over the top, you've got the river, the water to the side, you've got pipelines there for water, you've got pipelines for gas coming in. So all the infrastructure, the land, the surface area, approvals are easy to get because we own the surface. And all that relates to our lower capex cost, because the Army was there, they built all that infrastructure, as well as sidings, the railway siding, the road, the I-70. All that's really important when you're looking for a project that's going to be lower capex. And of course, when we come to build this, that's what the banks will be looking at. Right? They want to see how they're going to get repaid, the lower cost in OPEX, but also lower cost in CAPEX. All that makes it easier for them to make the decision to fund us.
Brilliant. What really astounded me is not only was the site less than a minute off of the highway, but in order to get into the site, you needed to cross the railway road.
Yes, that's right. And I don't know while you were there, we had the train go through.
Yes.
So we have sidings in Green River where the Army put them there. So that train didn't stop in Green River, but others do, and we can easily bring our equipment in for the when we build the plant, but also take it out. So that train line goes out to Long Beach, California, and we have an offtake with LG. And from Long Beach to Korea is just a short hop.
Brilliant, excellent. So Bruce, what are the major things that investors should be watching going into 2026? Why should we be owning Anson Resources right now?
Well, one is the share price is so low, right? So when we look at our peers, we know that it's going to, it should increase, the share price should increase to catch up with those guys, and something we're working actively on there. So that's really important. That will be driven by a couple of things. The state of the project at the moment. We finished the PFS, we're working on the DFS. It's coming along very quickly. We're doing a lot of work with the government. We're looking at grants, government grants to fund the project going forward. And so overall there's a lot of activity there, a lot of new things going to happen in the next 6 months which will drive a higher share price. So it's a very good buy.
Perfect, excellent. Thank you so much, Bruce, for the update with Anson, and we look forward to keeping a close eye on this milestone.
Thanks, man. Appreciate it.
Cheers.
Joining us now is John Passalacqua, CEO of First Phosphate. First Phosphate trades on the CSE under the ticker PHOS and on the OTCQX with the ticker FRSPF, and has a market value of around 325 million Canadian dollars. Unlike most of the companies that we're talking with today, First Phosphate, as the name suggests, isn't a lithium company. It's focused on building vertically integrated phosphate supply chain outside China to supply the lithium iron phosphate or LFP market. Its Beijing Lamache igneous phosphate project and phosphoric acid plant are both situated in Quebec. John, welcome to the Live Lounge.
Yeah, thank you for having me, Matt. It's been great to be here.
I'm sure you're pretty sick of me today. We've already done a panel, but we'll bang on. So you've had quite a few discussions while you've been at the conference. What have been the most important questions that you're getting this week, and what do they say to you about where the industry is heading?
Yeah, we're getting a lot of questions about the midstream, where there's finally a realization that lithium is great, but onto its own, it needs something else to get down into the midstream and to get into final products. So the big questions are around, how does phosphate fit into the equation? And I say, very simply, right? It's lithium iron phosphate, LFP batteries, which are now, somewhere between 70 to 80% of batteries produced on planet Earth. And they say, okay, well, tell me a little bit more about that. And it's like, well, lithium is about 4% of an LFP battery, iron is 35%, and phosphate is 61% of the cathode of the LFP battery. So, people are quite startled by that, and it sort of brings everything home on how, all these critical minerals are dependent on one another, and especially, with LFP, it's lithium, iron, and phosphate, phosphate being the predominant material in LFP, cathode active material.
And you gave a brilliant keynote yesterday at the conference, and I would urge anybody who wants to find out a little bit more about this topic to have a look at John's keynote, which was genuinely really, really good presentation. For investors who may not be familiar with First Phosphate, what do you think is the single most important thing that differentiates this company from its peers, apart from the obvious?
Well, yeah, it's really phosphate, but for the lithium iron phosphate battery industry. It's not phosphate for fertilizer, as everybody knows it. We are 100% fully focused on high purity igneous phosphate for the LFP battery industry, and our furthest upstream is the Beijing Lamache igneous phosphate deposit, and that has a conversion ratio into purified phosphoric acid for LFP of 91%. So we take that material there, we turn it into a phosphate concentrate, and then 91% of that goes into purified phosphoric acid which is the basis for these LFP batteries, right?
The famous
The
LFP
famous
battery.
yes.
Yeah, okay. And I mean, just to highlight, because I think a lot of people in the industry will know about phosphate mining, and they'll know about sort of the phosphate mining that goes on in North America. But your asset is completely different from the standard sedimentary phosphate that we see mined mostly in North America at the moment.
Yeah, correct. So 100% of the phosphate currently mined in North America is a sedimentary phosphate. It's like old seabeds, and it's really used in the fertilizer industry for agricultural purposes. And only a small amount of that can be upgraded with some effort into purified phosphoric acid. So what we have is the igneous phosphate, the igneous anorthosite, which represents only 1% of the world's phosphate, and we're lucky enough to have that in North America. That makes a lot of purified phosphoric acid that goes in the battery. So if you think sedimentary rock, think mostly fertilizer, and if you think igneous rock, think about battery grade phosphoric acid.
Brilliant. Okay, and I mean, easy question for you to answer. Why should investors own First Phosphate today? And just, I mean, you've delivered quite a lot of catalysts over the last 6 months or so, but what other catalysts should they be looking for over the course of the year?
Yeah, so I think, if you look at just a couple of weeks ago, First Phosphate received a very big endorsement at the G7. There was a G7 meeting in France, and at the G7 meeting under what is the Critical Minerals Resilience and Production Alliance under the G7, First Phosphate projects were announced. We announced major definitive bankable offtake at the mine for the concentrate and on the purified phosphoric acid level, which will be at the Port of Saguenay, along with intentions to finance from major nation states, Denmark, Italy at the table, private group as well. So all of this was announced underneath the banner of the G7 Critical Minerals Resilience and Production Alliance, and so that's really important. It shows that now there is allied support across 3 or 4 nation states to support this LFP battery supply chain into North America. And First Phosphate is one of the preferred companies that has been chosen to do that, or is being supported by the nation states of the G7 to do that.
Brilliant. Okay, John Passalacqua, thank you so very much for your time today.
Thank you so much. Great to be here.
So next up we have Alicia Milne, CEO of Q2 Metals. Q2 trades on the TSX Venture Exchange under the ticker Q2 and on the OTCQB with the ticker QUEXF, and has a market value of around $590 million, and that's really nice to say that after what it was last year. The company is advancing the Cisco hard rock lithium project in Quebec, one of the largest hard rock resources in the world, and it's hoping to publish a PEA by the end of this year. So Alicia, it's good to talk to you, and without your usual partner in crime today, Neil McCallum.
Neil's not here, no?
Yep. So I'll just go straight into the questions. What have been the most important questions that you've had this week, and what do they say, do you think, about where the industry is now?
Oof. The most important questions that we've gotten, I'd say lately, have been what's next? What are you guys working on? What's upcoming? So right now we're in the throes of getting our PEA done, based on the inferred mineral resource estimate that we published in April, which seems like a lifetime ago, but it was literally 2 months ago, a month and a half ago. It's been busy. It's putting all the pieces together now, doing the economics around what it's going to cost, and then at the same time working. So we're out there drilling. That started up last week. 2 drills going right away. 2 more coming online. I think it's this week, and then just ramping up and getting after it. We did that financing in May where we raised $70 million.
Yep.
So that's really giving us the runway to do all the things we need to do, because we just haven't had that runway since we got Cisco. It was quite a depressed market at that point.
Yeah, I remember. Yeah.
Nobody appreciated the fact that we bought another lithium project in such a down market, and now the tide's changed. And as you said, like our share price from last year just being here was, I think we were at like 50 cents, 60 cents, to now flash forward hovering around the $3 range. It's been amazing.
Yeah.
And now it's just making sure that we continue with the momentum that we've got.
Okay, so you're all cashed up and ready to go.
Cashed up, ready to go. got lots of upcoming catalysts with the PEA. We have assays still coming from the winter program. So, with the resource coming out, with the financing that we did, with the work starting now, we also drilled 10,000 meters over the wintertime. So getting that information, I think we've issued 10 holes so far. We have 9 other holes to come.
Right.
And I mean, they were good holes. So just, lots of information flow coming.
Okay, brilliant. So for investors who may not be familiar with the stock, what do you think is the single most important thing that differentiates Q2 from its peers?
The scale and quality of Cisco and the infrastructure, where we're located. I mean, this is the 4th largest spodumene lithium deposit in the world, located 150 kilometers from the train that would essentially take you down south to get it further processed. So I think that is the biggest differentiating factor from all the other projects in James Bay, and it's amazing, and yeah.
I mean, it is a huge thing, I think, having the rail so close aboard, because the cost of trucking compared to the cost of transporting by rail is multiples.
Yes.
So that's very significant. Okay, and why should investors own Q2 today? I mean, obviously the share price has risen very substantially. So why should they still own it now? And what are the key catalysts that you're concentrating on delivering before the end of the year?
I think there's still some significant upside to us. You could look at some of our peers in the region who might have twice the market cap as us, but we have twice the size of the deposit. So there's still upside to be had with Q2, even though our shares are trading at $3-ish a share. I think there's a lot of upside to be had. Catalysts coming up, assays like I mentioned, network. We have our second phase of metallurgy work in the lab right now, ongoing. And the PEA. I think the PEA will be a huge milestone for us. We like to set milestones for ourselves. The resource was the first one, and now the PEA. And getting that out there to the world September, October-ish is the goal.
I think it's going to be really interesting to actually sort of see you guys put some numbers on some of the aspects of the company. I mean, DMS only, what does that mean? The transportation solution, what does that mean vis-a-vis other projects in the area? And obviously the mineralogy and the quality of the product as well. Yeah. So that's going to be a differentiating factor.
Yeah, absolutely.
Okay, Alicia Milne, thanks very much indeed for your time.
Thank you.
Okay, so joining us now is Gabriel Rubaca, CEO of NOA Lithium Brines. NOA trades on the TSX Venture Exchange with the ticker NOAL and has a market value of around 65 million Canadian dollars. The company has 3 projects in Argentina. Its flagship is the Rio Grande project, but during the course of this conference, it announced that it's entered into an earn-in agreement with Summit Explore to advance the Arizaro project as well. Gabriel, welcome to the Live Lounge.
Thank you, Martin.
So the first question is, what have been the most important questions that you've had in your meetings this week? And what do they say to you about where the industry is currently?
I think the first thing is the mood is completely different from last year. You know that.
Yeah.
The questions were around where we are with the Rio Grande, but also were associated with the recent announcement. We announced this on Monday, this announcement of Arizaro that will unlock value for NOA. We've been looking for this for the last 2 years. So basically, the questions were around where are our current plans for Rio Grande, where are the next catalyzers that we see on Rio Grande, what are our expectations there. And we are very confident that we're going to get there with the PFS before the end of the year, early Q1.
Excellent, okay. And for investors who may not be familiar with the stock, what do you think is the single most important thing that differentiates NOA from its peer group?
I would say that a couple of things. First of all, we own a portfolio of projects rather than just one. Until Monday, we've been focusing on just one project. Now we are unlocking value to the second project. We still got another one. We've got 3 projects. That's one thing. The 3 projects are based on brines. We believe that all are low cost for its development. The second thing is our management is well involved in the company. We are shareholders. We still got a strong participation with more than 15% ownership in the company, so we behave as shareholders. We got strong skin in the game. And the other thing is that we don't have any royalty, and we don't have debt, and we don't have any string attached to our projects.
Okay, and why should investors own NOA at the moment, today? What are the key catalysts that you're going to deliver by the end of this year?
I strongly believe that we are well undervalued. We mentioned our current market cap based on the PEA just for Rio Grande, without assuming any value yet for Arizaro. Well, our PEA got an NPV of 1.3 billion just one stage, and 2.3 billion for the full stage for 20,000 and 40,000 tons. So we got a big catalyzer shortly within the next 6 months for a PFS. We are working on the permitting for Rio Grande. That is going to be submitted in the first part of 2027, and we are also going to be submitting the application for RIGI on the first part of 2027. So we believe that this will unlock additional value, will provide Rio Grande a strong foothold for the development of the project. I don't believe there are many projects undeveloped for this size in terms of resource and high concentration in brine.
Brilliant. Gabriel, Rebecca, thanks very much indeed for your time.
Thank you, Matt.
So joining us next today, we've got Greg Reimer, President and CEO of Surge Battery Metals. Surge trades on the TSX Venture Exchange under the ticker NILI and the OTCQX as NILIF, and it has a market value of around 170 million Canadian. The company is advancing the Nevada North Lithium Project, one of the highest grade lithium clay projects in the United States. Unsurprisingly, given its name, the project is located in northern Nevada, one of the most strategically important lithium jurisdictions in North America. So Greg, welcome to the Live Lounge.
Yeah, great to be here, Matt.
Okay, so kicking off with the questions, first up, you've had a number of meetings this week. We talked about it this morning at breakfast. You've obviously had more meetings since then. But what have been the most important questions that you've been having, and what do they say for you about where the industry is heading?
Right. Well, I should say that over the years, I have attended, and Surge kind of at large has attended a lot of conferences, and we've really focused with investors and raising capital and things like that. And we're closing a $36 million financing today. That coupled with money that we have on hand, we're financed to final investment decision now. So we didn't have a significant focus on raising capital at this conference, and focus more talking about offtakes and things like that. So the questions that we're getting really are from battery manufacturers about availability of supply, from traders, and a new one that's come along in the last several months are refiners. And so the offtakes have moved from a focus from OEMs to other groups, and I think that's kind of a natural progression of the industry, and I think it's a positive one. I mean, the OEMs are still here. In fact, one of our guys is meeting with one of the OEMs right now, but they haven't been terribly active since, say, 2023.
And do you think that has anything to do with the change in the US government sort of, feelings on the battery sector? So it's moving away from sort of EVs more towards storage?
Yeah, I think it has. I think the retail subsidy that the federal government took away has had a big impact on that. And as you know, the OEMs have moved their facilities to more developing stationary battery storage products. So,
LFP cells. Yeah. Okay. Right. So for investors who may not be familiar with Surge, what do you think is the single most important thing that differentiates the company from its peers?
Well, if there's a...
You can go into more than one if you have to.
Okay, good. Well, our project has got the highest grade lithium clay grade in the United States, and so that's a big differentiator that we have. Also, our resource is close to surface. It starts at surface, goes down about 400 feet. So the consequence of those two things is that we are the lowest cost operator compared to our peers. So we've got low mining costs, we've got low processing costs because we have the higher grade. We're just 3/4 of the way through our PFS right now, and we've been going over numbers and things like that. And I can say that I'm really pleased with the numbers that we're seeing in engaging with our engineers on the PFS. So we hope, of course, to have that out in Q4 of this year, and I think indications are fairly positive.
Excellent. So, if I'm an investor today, why should I be buying Surge? And what are the key catalysts that you're looking to deliver before the end of the year?
Yeah, well, with this recent investment we have, we've brought on some strategic investors that are from the United States. Michael Hess, his family's got a lot of history in the oil and gas business. He's well known in the United States, well known in Washington. We together want to kind of move this project into the next gear and fast track it, through permitting, through PFS, through DFS, and on to FID. So, I think that's the most significant reason why, as an investor, they should be buying Surge right now.
Excellent.
And to answer your question about catalysts, we have, of course, our PFS out in Q4 of this year. We'll be pivoting through to DFS and all sorts of good things after that. So,
brilliant. Okay, Greg Reimer, thanks very much indeed for your time.
Thanks, Matt. Have a good day.
Okay, so we're done with the corporate interviews, but we ran into Chris Robb here. You may remember we had a bull-bear debate famously in November, I think, of 2024 at the Benchmark Conference. Then we saw you here last year. We had you and YJ on. You were decidedly a bit less bearish, I think, or just talk about how you left last year and what's happened in the past year, and how do you feel now?
Yeah, when I walked out of here last year, I was pounding the table to my clients to get long. I think people were too bared up, and they got long and went up 100%, and we sold, and that was a mistake because it went up a lot more. And if you ask me, I'm surprised it's gotten into the 2000s. I thought it would get into the sort of mid thousands, high thousands, and
you're talking spodumene.
Yeah, spodumene, and I was just wrong. Investment business, you're wrong sometimes. And I think if you look at 27 against 26, given the demand growth, it's pretty hard to see how prices are going to crack. I think you're probably in a nice sweet spot. You're definitely past incentive price, and everybody wins.
Okay, when you were bearish, I think in November 2024, I think you saw like a lot of supply coming on, and you thought like Argentine brines, like the incentive price was a lot lower than other people thought. Have your views changed on that at all?
Maybe a little bit because of CapEx. What I thought then is anytime prices go down, they always go through cost. And that's what happened then. I think we ended up at $650 for spodumene, and I think $8,000 for chemicals, and that's what always happens, and that's why I was more bearish. And to be fair to you, Howard, the price only went down 20% from when we had that debate. It wasn't like there was a lot more downside. I just thought there was more.
Right. Okay, and just remind us, you have your own consulting firm, and
yes, I do.
You have a lot of experience in nickel and platinum and other things,
yeah.
But you've been focused on lithium for a while. So what do you bring from your traditional metals experience to thinking about lithium and from a comparison point of view?
I mean, it's a bit of a different animal. The demand side is very, very hard to get your hands around, just because it's so strong. And if you ask me what I got wrong coming out of this last year, was just the demand side. It's the hardest part to predict, and demand's been going gangbusters, and that's certainly helped price. The one magic thing about lithium is, really still to this day, outside of China, you can outside of China and Nigeria, you can literally almost model every molecule of supply, which gives you a lot of conviction on the supply side. You can't do that in something like copper or coal or zinc. It's just too diffuse. So, yeah, interesting. Yeah.
Okay, so everyone was bearish last year, so you said, I'm all bulled up,
Yep.
This is the bottom.
Yeah, it's the bottom.
How is it today? Are we too bullish, and is it the top? Or
I think we're just sideways. I think price is going to stay in this range for a while. I think you're in a good spot. People can get financed. I don't think there's going to be some overnight tightness. I don't think there's going to be some overnight massive looseness. I think it's kind of interesting that people are so fixated, particularly in China, on CATL bringing back the lepidolite mine. I mean, it's a decent-sized mine, but it's not 10% of the market. I think it's 3%. I mean, it's not that big a number. I just think it's, I think that's going to affect futures prices. I'm not sure how much it'll end up impacting spot prices.
So you think the sell-off that we've experienced in the last kind of couple of days is a buy opportunity?
Yeah, I mean, if you look, we've had, I think in the last 4 months, we've had probably 12 of these sell-offs, goes down for a week, and then so you're in this range, and you're just in a range, probably going to stay in that range.
Okay, so we're on day 3. There's, I guess, one more half day to go.
Yeah.
I mean, have you seen anything interesting here?
Funny enough, I have. I don't usually. An old boss of mine said, when you get bulled up, you should be more excited about things. And not my demeanor, but but this actually, I saw an idea today. I mean, that was hell of an interesting. I was because I come to this conference, I really just try to put my earphones on and listen and learn. It's a learning conference. I've run into people like you and a couple of my clients.
You're constantly on your laptop, and I see your Bloomberg, and you're busy typing all the time.
All the time, working. But I try to learn, listen, and I was it was a lithium. It was an Africa panel on lithium, and there was this company up there, Lithium Africa, and they got a CEO from, I think, Lithium Americas or something, like PhD geologist. But the magic here is like, stock's worth nothing. It's like 20 million US dollar market cap. They've got a nice land position in South Africa. They have one in Cote d'Ivoire. But the magic is their 50-50 asset level JV in Cote d'Ivoire with Ganfeng. And apparently Ganfeng wants to get in on the South Africa thing at the 50-50. They'll match, your exploration spend. And the downside here is in the stock. I mean, say you find nothing, stock's going to stay at $20 million. You actually find something, prove of an MRE, this can be like an 8x, a 10x. I mean, there's shit out there.
That's all right.
There's stuff out there. There's stuff out there that trades at $250, $300 million on exploration and and on MREs, right? So this can work. I mean, it's interesting.
So it's on that early stage of the sun curve, but right now it's
not even the first inning. It's like the first batter's coming up to the plate. It's like you're early, and pretty good pedigrees, decent land position, and the magic is if it doesn't work, it's just going to stay at $20 million because they got a big enough land position where people are just going to give it more time to drill and drill and drill. So the risk reward is just massively asymmetric.
You're buying an option on a discovery.
Bingo, correct.
Right. Okay. Full disclosure. I mean, I'm glad to hear you say that. I had no idea that you were going to say that, but we're invested in and advisors to Lithium Africa.
Serendipity.
Yeah,
there you go.
Yeah. And Tom Benson, we interviewed earlier, just who you mentioned, the geologist with well pedigreed, was just announced as the CEO, and he takes the helm, I think, July 1st.
Is that right?
So anyhow, okay, that's great. I think we're going to do a longer form. I see YJ Lee is here, and we promised.
YJ's the man.
Yeah, so it was very popular. We had both of you on. I think we're going to do that again sometime in the next kind of couple of weeks.
That'd be great. And Howard, take care. Appreciate the time. You have
Thanks
a nice
a lot,
day.
Chris. You too.